Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and wearing my Inter Miami older jersey, one of my older kids here, kind of welcoming Lionel Messi to the area, getting ready for his first game in the Inter Miami kit. So it'll be kind of interesting. Anyway, moving on here, we'll go ahead and take a look at the equity index futures for the week of July 16th. And kicking us off, just need to remind you that we're not broker dealers or investment advisors, nor am I a good football player, at least not anymore. Anyway, what we're doing is we're taking a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities, giving personalized recommendations. All markets do involve risk of loss. This is always a situation. No matter what we do, we can never eliminate the risk. What we can try to do is minimize the risk, and past performance is no indication of future results. There's always a possibility of losing money in the markets, so do not trade with any money you can't afford to lose. And we're not subject to trading restrictions, so we can have a position in a security or initiate one at a time. Stay in touch with me, please. I love the feedback. Love to be able to interact with you. You can obviously put comments in the video. You can also email me at brandonwendell.cmt@gmail.com. You can find me on Twitter, as I tweet regularly, especially about the equity index futures. At TraderBW is my handle there. And of course, if you wouldn't mind, please hit like and subscribe for the Wendell Effect here on YouTube, and that'll help us out greatly to make sure we can provide you with this information on a regular basis. So jumping into the markets for this week, again, July 16th for the equity index futures. Well, counting out on Elliott wave, I decided to do that. It looks like we got a pretty good wave going here. 1, 2, 3 is what we're in right now, which means we should be expecting a correction, but we're not quite at weekly supply, nor are we at the end of the impulse as of yet. So we still might have some room to go to the upside. Going into the ES here, if we want to kind of measure what's been going on, typically, there we go. When you take a look at wave 3, it's usually 1.618 times wave 1. Although you can see right now we have been moving up. This is the measurement on wave 1, these Fibonacci extensions. And we paused right here, 61.8. We paused right here at 100%. And my supply that's overhead, that's actually not correct right there. There's the daily. I believe that was set up on a different time frame. But either way, you can see, yeah, that was the weekly. On the daily supply, we're coming close to it, but it measures right up at about 1.272, which also could be one of the measurements for wave 3. So it's probable that we're going to continue to move up a little more this week or even the next 2 weeks before we get a bit of a pullback or correction in the market. So maybe we continue to be bullish July into August and then start to pull back a little bit in September. Perhaps a little bit earlier, though. The timing is not quite right for a September pullback yet. It's right for a kind of early mid-August pullback first. Looking at the daily chart, you can see that we did have a little bit of divergence, and we started stumbling a little bit. That's kind of our wave 4 of 5 inside of the wave 3. I don't want to get too much in depth on the Elliott wave yet, but maybe I'll put that in one of our chart school topics. Anyway, we do not have a divergence anymore. We are actually getting more momentum as we are breaking out to the upside. So we may get a little bit of stumble during the week, but overall we should finish out this week much higher than we started the week. Looking at the 4-hour chart, you can see that we have hit some projections. Looking at the previous impulses, correction, stalled out at 61.8. Now we're stalling out at 100% duplication. We get a bit of a pullback. This 38.2% pullback at 45.03 looks like a pretty good bouncing point for price to continue to move to the upside. So that's where I would look forward to possibly be a buying opportunity. If not, the demand is way down here, really at 44.75 area, 44.70 to 77. So either one of those, either 4,500 or the 44.75 area would be where I'd look to buy and join that impulse back up. Looking at the NASDAQ, you can see that last week we were able to break out of supply. Typically, when you hit supply, if you don't turn around right away, like right here, we went sideways for about 3 weeks, you're usually going to continue to break out of that supply. You're building momentum to get through that zone by staying there. So typically, if a zone's going to hold and reject price, it does it relatively quickly. The longer you stay there, the more likely you are to continue. And that's what happened. We broke out. Now, when you get a breakout, you'll often get a small retracement before continuing higher. And ultimately, we got this little bit thicker of a zone here at around that 16,000 point, just above it. So on the daily chart, continuous, you can see that projecting our previous move, we pretty much stopped at every projection along the way. And now we're bouncing off a little bit of daily supply. So wouldn't be surprised to see a little bit of a pullback, but we do have plenty of bullish momentum to carry us forward. Our next overhead supply is 16,849. We do have not really a great demand right here, but something around 15,250. So look for a small pullback to that before buying again and targeting the 16,900 area. Looking at the 4-hour chart, pretty much the same. We hit our projection. We're stalling at the next one. Again, we might get a little pullback into that. Well, again, you see that 15,250 is really good buying pressure. Although we may stall out here on the correction at about 15,450, 15,500. So watch for that as a possible bouncing point to carry us up into those overhead targets I mentioned. The Dow, unfortunately, is a lot weaker than the NASDAQ. The NASDAQ's really been leading us to the upside. I don't know if you saw the news, but they're doing some rebalancing and reweighting of the NASDAQ, so that may have a little bit of a dampening effect. They're trying to keep the index from being moved by just a few securities. They're trying to distribute the weight a little more evenly on that, and that may bring it down a little bit as well. But the Dow has been very, very weak. You see, we're just alternating weeks. I mean, if this holds true, green, red, green, red, green, we're due for a red week. And we really have almost no momentum on the weekly chart. We're just stuck. But, we should break out of this triangle pretty soon. And if the NASDAQ and ES go up, it'll probably drag the Dow up with it. Looking at the daily continuous, you can see the momentum is just dying off. So it is possible we continue to go sideways or even pull back to 34,000 at the bottom of that kind of sideways channel we're being pushed into. Looking at the 4-hour chart, we definitely have a divergence. You can see we made pretty much the same high in price, but a much lower high on the indicator. That usually leads to a bit of a pullback. So I wouldn't be surprised to see us pull back to about 34,414 this week before rallying again. But this is not the best index to be going long. It is the strong bearish index in comparison to the others, but not even that great either. So you may want to find better opportunities. Looking at the Russell as the final index, it also is consolidating on the weekly chart. You can see we're getting tighter and tighter. Eventually, again, should break out. Now, if it breaks in the same direction it entered, which is down, that'll be contrary, and it has been doing that. If you go intraday, the past several days or even weeks, when the equity markets have been moving up, the Russell has been going the opposite. It's been doing a downward move while the others are moving up. So keep an eye out for that. It's not very strong at all. And we could be pushing through this supply. You do have drop-based drop on the weekly. Like I said, we spend a lot of time there, so we're likely trying to punch through it, but it just doesn't have a lot of momentum. On the daily chart, we went pretty deep into supply, and it's looking a little bit weak right now. So we may get a small pullback, but overall, we have enough momentum to continue up to our next targets. It's just a matter of how far it might pull back. There is, I don't know if that's fresh demand. It's really a retest of a prior area, but 1880 might be a good bouncing point for the Russell to push back upwards if it's going to follow the NASDAQ and the S&P. Down on the 4-hour chart, you can see we've had a retracement. We hit pretty much every target along the way. Our next overhead target is 1997, but we got to get some momentum first. We had a divergence where prices, again, made a new high. The indicator didn't. It pulled back, and of course, price followed. So for us to continue to go higher, we need to make a move up and really break out of this prior peak, I would say right here on the RSI. If we can do that, then we'll reach the 1997. If not, then expect prices to just go back and forth this week and maybe end up right around the 1925 to 1950, actually 1940 area by the end of the week. So that's what I got. If you got any comments or any questions or any feedback, please send me an email, brandonwendell.cmt@gmail.com. Again, you can find me on Twitter @TraderBdub, and please give me the like and subscribe. I appreciate all that following and the help. You can also get the alerts if you'd like to as well, so you get notified when we put out new videos every week. Until next time, trade safe, trade well. Take care, everyone. Thanks for being here.